Welcome back to the deep dive. Today, we're plunging into a sector that, well, let's be honest, sometimes gets labeled as a bit slow-moving global insurance.
Right. But I think people might be surprised.
Exactly. Prepare for a deep dive into its surprising growth, its incredible scale, and some really impactful innovation happening right now.
Yeah, there's a lot going on beneath the surface of this, fundamental industry.
You might actually be amazed.
That's right. So our mission today is basically to unpack the global insurance market. We want to pull out the key trends, the pretty impressive numbers, and the insights that are genuinely shaping its future.
And this is all grounded in solid research.
Absolutely. It comes straight from our source material for this dive, which is Global Insurance Market, Trends and Projections by Cognitive Market Research.
Okay, so let's start with those numbers because they really are quite striking. In 2021, the market was valued at, what was it, almost $1.3 trillion?
A staggering number, yeah. Just under $1.3 trillion.
But what's really compelling is where it's headed. The forecast suggests it's going to hit an incredible $2.1 trillion by 2033.
That's a compound annual growth rate, or CAGR, of 4.3%. Steady growth.
Steady but significant. That's nearly doubling in, what, 12 years?
Exactly. And it's insightful because this isn't just like passive expansion.
Right. What's driving it?
The transformation is really being pushed by some clear, interconnected forces. Things like evolving consumer expectations. People want different things now.
Okay.
Then there's significant digital disruption, obviously, and just broader global economic shifts play a big role.
So it's a dynamic picture, not static at all?
Far from it. The whole idea, the value proposition of insurance, it's actually changing.
Okay, so let's unpack that a bit more. What are the core engines, the things really fueling this growth?
Well, the source points to a few fundamental reasons. First off, the expansion of middle-class populations globally.
Right, more people with assets to protect.
Precisely. As people gain financial stability, they naturally look for ways to protect what they have and their future. Second, there's a rapidly increasing awareness of risk management.
People are just more aware of risks.
Yeah, maybe more proactive about safeguarding against unforeseen events.
Yeah.
Partly due to seeing more global risks unfold. And third, we're seeing rising adoption of essential health and life insurance plans.
So these are becoming less like luxuries.
And more like necessities, exactly, for a growing number of people worldwide.
So if you connect these big global trends back to, say, your own financial planning, your security, it really highlights that needing coverage isn't just theoretical, is it?
Not at all. It's becoming a really practical reality for more individuals across the globe.
How do you see that playing out day to day for the average person?
Well, as economies grow and people, accumulate more assets but also face new kinds of risks, the need for protection, both perceived and actual, it just grows alongside that.
So insurance becomes more central to personal finance?
For a much broader group of people, yes. It's moving closer to the core of financial strategy.
Okay, now let's take that global tour you mentioned. The source material has some fascinating specifics about who's leading and who's really picking up speed. North America, for instance, still the leader.
Currently the market leader, yes. Expected to grow its revenue to over $686 billion by 2033.
Wow. And the U.S. is the giant within that?
Dominating, yeah.
I see.
Projected
Okay.
sales over $543 billion. But there's an interesting detail within that region. One country is kind of quietly outpacing the others in terms of growth rate.
Oh, not the U.S. or Canada.
Nope. The data actually points to Mexico having the highest CAGR in North America, a standout 5.1%.
Mexico. That is interesting. Really shows you where unexpected growth pockets can emerge.
Definitely. Meanwhile, over in Europe, it's building on a really solid foundation. You've got the big players, Germany, the UK, France, all contributing significantly.
The usual suspects.
Right. But beyond those giants, we're seeing notable growth from places like Luxembourg and Denmark, both showing KGRs above 4%.
So again, growth isn't just concentrated in the very largest economies.
Exactly. It connects to that bigger picture. Growth can come from diverse sources.
Right.
And then, then you have Asia Pacific.
Which is really surging, right?
Oh, yeah. This region is on a really robust growth path, expected to hit over $457 billion by 2033.
And the engines there are China and India.
Unmistakably the key drivers, yes.
Yeah.
India, in particular, is posting an impressive 5.7% CAGR.
What's fueling that in India?
It seems to be a combination of its rising youth population and some really smart government-backed insurance initiatives making coverage more accessible.
Okay, interesting. But Asia Pacific holds another surprise, isn't it? Who's leading the growth rate there?
Get this, Taiwan actually tops the regional CER charts.
Yeah.
An astounding 6.5%.
Taiwan. Wow.
Yeah, and followed by strong performances across Southeast Asia and Singapore, too. It's a really strong regional showing overall.
Okay, let's hop over to South America. What's the picture there?
So its market is projected to reach over $183 billion by 2033. Brazil is the dominant player in terms of revenue, no surprise there.
Right.
But keep an eye on what the source calls the rest of South America. That group is showing really high potential with a 6.7% CAGR.
Higher than Brazil's growth rate.
Suggests significant untapped demand in those other markets, yeah.
Fascinating. And the Middle East, you mentioned momentum there.
Serious momentum, yeah. Especially Saudi Arabia, the UAE, Qatar. It looks like increased regulatory reforms are helping, plus expanding market access, particularly through digital platforms.
Making it easier to get insured.
Exactly. It's opening things up.
So that brings us to a key question, I think. Which region does the source identify as the global growth champion? Because you hinted it might be surprising.
It is definitely surprising. It really challenges common assumptions. Any guesses before I reveal it?
Based on those high-G years, maybe rest of South America? Or Taiwan? No, wait, you said globally. Okay, lay it on me.
Drumroll, please. It's Africa.
Africa.
Yep. The report forecasts Africa to be the fastest-growing region globally, expected to more than double its market size from about $64.5 billion in 2025 to over $124 billion by 2033. That's a remarkable 8.6% CAGR.
8.6%, that's huge. Which countries are driving that?
Within Africa, South Africa and Nigeria are highlighted as key drivers. But here's the kicker. South Africa boasts the highest CAGR among all markets mentioned in the source.
Higher than Taiwan. Higher than rest of South America.
Higher than everyone. A stunning 9.3%.
Wow, 9.3% CAGR for South Africa. That is genuinely surprising.
It absolutely is. It underscores this, vast untapped potential, but also the success of initiatives aimed at increasing financial inclusion across the continent.
It really does reshape how you think about where future economic growth, especially in this sector, is coming from.
Totally. It speaks to a profound shift in access and awareness and the impact of developing financial literacy and infrastructure.
Okay, so that's the where. Let's pivot to the how. How are technology and these newer types of risks fundamentally reshaping the insurance industry itself?
Well, the source is very clear. The technology is playing really a pivotal role. It's not just tweaking things, it's changing the game.
In what ways specifically?
We're seeing the rise of AI-driven underwriting, using artificial intelligence to assess risks much faster, potentially more accurately, moving beyond just the old actuarial tables.
Right. More data involved.
Tons more data. And this naturally leads to more personalized policies. So your coverage can be tailored specifically to you, not just a broad demographic you fit into.
Makes sense.
And perhaps the most dynamic part is usage-based premiums getting traction.
Like pay-as-you-drive insurance.
Exactly like that. Think car insurance where the price changes based on how safely you actually drive, tracked by telematics. Or even health insurance that might reward your healthy habits, using data from wearables or apps.
That feels like a big shift. And it also ties into these emerging risks, right? Insurers have to cover new things.
Absolutely. The source highlights a growing emphasis on specialized products. Cyber insurance is a huge one.
Almost essential now for businesses, even individuals.
Becoming critical, yeah. And also climate-related insurance products, dealing with floods, wildfires, storms, events that are becoming more frequent and severe. Insurers have to respond to the world as it is now.
Not just how it used to be.
Exactly. And what's fascinating underneath all this is that insurers aren't just like adding new product labels. They're actively working to modernize their old legacy IT systems.
That must be a huge undertaking.
Massive. And they're pivoting towards becoming much more data-driven organizations. It's not just about efficiency. It's about being more precise, more responsive in understanding and pricing risk. It's transforming how they operate internally.
Okay, so let's boil this down. What's the practical takeaway from all these shifts for us, the consumers?
Well, it means insurance might look and feel fundamentally different for you in the pretty near future.
But how so?
It could become far more tailored to your specific situation. More dynamic, maybe premiums change more often based on behavior or risk levels, and just incredibly responsive to modern challenges like cyber threats or climate impacts.
So maybe fewer one-size-fits-all policies.
That seems to be the direction. A shift from, static protection based on averages towards dynamic, predictive, highly customized coverage, all powered by data and AI.
Right. So, wrapping up this deep dive then, we've seen a global insurance market that's, well, it's anything but boring or slow moving,
Definitely not. It's incredibly dynamic, evolving really rapidly.
and projecting significant growth with some genuinely surprising geographic hotspots leading the charge.
Absolutely. And looking ahead, it seems clear that the impact of AI, big data, and these new risk categories, cyber, climate, they're just going to keep reshaping every corner of this industry.
It's definitely a space to watch for innovation.
No question.
Which leaves us, and you, with a final provocative thought to maybe chew on. Given this big shift towards AI-driven personalized policies and maybe usage-based premiums, how might our whole understanding of shared risk versus individual responsibility evolve?
That's a deep question. When insurance gets super tailored.
Exactly. In this increasingly connected, data-rich world, what new ethical or societal questions pop up when your insurance is tied so closely to your specific behavior, your data points?
Does the whole concept of pooling risk change fundamentally?
Something to consider as this market continues its pretty incredible evolution. We'll catch you next time on The Deep Dive.